Hey guys, in today's video, we're discussing OARK versus JEPQ. Which fund should we start buying as the market pulls back from the highs that it's made recently? We earn over $100,000 per year in dividends at this channel, and we also are outperforming the market doing our passive income approach. We're up 32% for the year. The Dow's up 3%, the SP's up 14%, and the Nasdaq's up 29%. So in my channel, I earn, again, over $100,000 per year in dividends, but also I try to outperform or at least perform somewhat in line with the markets because you can't just earn dividends that go sideways to down. You actually have to have performance and get the best of both worlds, capital gains and dividends. And so to do this, I use margin, okay? I use the purchasing power that every brokerage account provides to you. So for every $1 you put in your account, net account value 400, they give you 4 times that in purchasing power. So obviously I've used quite a bit of margin. I have 250 grand in margin, as you can see here at the bottom of my portfolio. So that's taken away some of my purchasing power, but this 250,000 is earning me over 20% interest because I invest most of this in high yield funds, including Cornerstone. If you need help with margin and playing it properly, email me for my e-guides at aikentodd48@gmail.com. Cornerstone also, you have to play this fund properly. It has a 21% dividend, but you have to learn how to play it right. It drops every year before the rights offering. So it has a rights offering each year, and it drops the stock significantly. You have to sell before that rights offering announcement. 783 is the market price that you get right now for Cornerstone, but it drips its dividends here back down at 627, 653. As you can see there before my screen locked out. CRF right here, 654, 653. You see these gains? 642, 652, right? 20% gain. 642, 21% gain. 627, 24% gain. This is every month on Cornerstone. So again, you have to learn how to play this fund properly too. Don't just buy it blindly. People ask, why does it go down on its chart over time? Because it has a rights offering every year. It tracks the indexes, the S&P and the Nasdaq, and it tracks it almost identically. It tracks them, but then it has the rights offering. That's where it has a mind of its own. So play that fund properly. If you need help with Cornerstone, email me for my e-guides at aikentodd48@gmail.com. So OARK is what's next in the portfolio. This is my second largest holding next to my Cornerstone funds. And OARK has about a 30% dividend, between a 30 and 50% dividend. If we go to its website right now on a snapshot, you'll see that it has a 48% dividend. Now, E-Trade is off a lot, so make sure you do the proper math every day. When the fund changes, when the stock fluctuates in price, the dividend fluctuates. So all I need to know is that OARK has one of the highest yields around, and it tracks ARKK. So to me, that's a good way to play tech and growth because ARKK is still cheap. It's still significantly off its highs. If you look at it on a 5-year chart, it's still heavily depressed there. It used to be at, looks like 150, and now it's at 50. So catch my breath here. I still believe in ARKK. It's one of its largest holdings is Tesla. So we already own Tesla, which has a 60% dividend, but for ARKK, it owns 10% of Tesla. As you can see here, Tesla is 11% now of its assets. So you're going to get an indirect exposure with Tesla through ARKK. And so like I said, it's cheap. And if you look at the chart of JEPQ, you'll see that JEPQ has had a large move. And a lot of tech is back at the old highs, almost back at the old highs. If you look at QQQ, it's almost back at the old highs. JEPQ, I mean, look here. It's, if you look at an all-time chart, it's nearly back at its highs. So has a nice dividend, 12%. But this is why I'm picking OARK over JEPQ. Because not only is does OARK have a bigger dividend, of course, OARK has a much larger dividend. But if you look at the maintenance of JEPQ, you'll see the maintenance is 50%. So 50% maintenance for JEPQ, which means for every $1,000 you put in JEPQ, 500 of your equity is taken. And if you look at OARK's maintenance, you'll see that it is, wait for it, the maintenance for OARK is the same. It's at 50% as well. So if the maintenance is the same, which means, again, for every $1,000 you put into these funds, it takes up 500 of your equity, why wouldn't I go with OARK? Of course, JEPQ is higher quality. The holdings within JEPQ are much higher quality than the holdings within OARK. I concede that point to the people who love JEPQ. And I love JEPQ as well, but OARK has the same maintenance as JEPQ. So this available withdrawal number will be affected either way if I buy OARK or JEPQ. So if my equity if it takes up 50% of my equity with that maintenance, why wouldn't I go with the higher yield to my equity through OARK? Now, again, my account value is $400,000, but if this 150 goes to zero, you have problems, this equity number. So that's when you're at a margin call. So again, this number 150 is really what I watch, okay? The 150 is way more important than the 400 because your 400 can fluctuate daily. I try not to look at this number. Yes, we're up only $86, which is a very rare day for us, very flat. Usually we're up or down many thousands because we're playing with large scale here, but the market was pretty flat today. Dow is down 0.01, and so we're up 0.01. That's exactly how we like to be when we're trying to tie our investments to the indexes. As you can see, again, our performance value shows that we're beating all the indexes because we tie our investments to the indexes. OARK has Tesla in it as its largest holding, so that actually mimics the Nasdaq some, since Tesla is a large holding of the Nasdaq. So ARKK is cheap. JEPQ is not cheap, so I'm playing OARK as a way to get extra exposure to ARKK. ARKK cheap. The QQQs, the QQQ index, not cheap. Okay, once again, if we go look at a chart of the Qs, we just looked at a chart of JEPQ. Let's just look at QQQ. It's almost back at the highs as well. So ARKK, not even close to the highs. JEPQ and QQQ back at the highs almost. So I'm going with ARKK or OARK because it's cheaper, it has a larger dividend, and it has the same maintenance. And if you need help understanding maintenance, again, email me for e-guides at akintodd48@gmail.com. It's the secret to living financially free. When I travel the world or do whatever I have to do, buy a car, buy a house, which all my dividends qualify me for instead of day trading, this available withdrawal number, I can just pull money out anytime from. I can swipe my credit card, withdraw cash from here at any time, even though I'm in $250,000 in debt. Okay, even my interest on my debt is small. It's around 5 to 6% because I have a larger account, I trade frequently, and I negotiate it down as a result. But even if you guys have a high interest rate for your margin, you can still do this. I've made many videos recently on how to live even with a high margin rate. It doesn't matter because if you have all these high paying dividends, it pays back the margin at the end of the year. Even if you have, if you're losing some to interest, you'll just have all these dividend paying assets to yourself after your margin is paid down, and you're just left with the interest, so the interest will be paid down in the next month. Also, all those dividends that you qualify for now, as you go into margin and give yourself a pay raise into the next year, that acts as qualifying income to banks, which then gives you loans. It's like real estate. If you're in the house and you have a renter in the house, then that qualifies for the next house. The down, you can get a down payment and then actually qualify for a loan on the next house if you have a renter in the previous house. So I'm using the dividends here to qualify me for the next round of loans that I'm getting. I'm already in talks of getting loans. Someone asked me in my comment section today, hey, can you do a video on starting from scratch? Well, I did start from scratch after Corona, but I traded my way back to the top, which I have past videos on. You can check those out. But also I got loans. I applied for loans, and that's the quickest way to level up is through loans. And dividends provide that ability to get you a loan. You can't get loans through trading, once again. So that'll do it for the video, guys. Who do I choose, JEPQ or OARK? I choose OARK because it has the same maintenance, higher yield, and it's cheaper. It's less quality than JEPQ, but it has more value in my opinion, and the dividend still beats anything around. If I just hold the fund for less than 3 years, OARK, then I'm paid back in full, whereas JEPQ, I have to own it for about 8 to 10 years before that cash flows. So we're into cash flowing every position here at this channel in my portfolio. I don't care about days, gains, or losses. I just want to track the indexes and have all the positions cash flow themselves. And the yield max funds like OARK cash flow themselves quicker than other funds like JEPQ and quicker than real estate. So this is, I feel, the superior strategy on living financially free in life, using a little bit of margin, a fraction of what the brokerage houses provide to you, just a fraction of this number, plus use Cornerstone as your anchor because it's the indexes and it has a 21% yield. But again, you have to learn how to play Cornerstone and margin correctly. If you're interested in this strategy of living financially free through dividends and a brokerage account, email me for my e-guides at aikentodd48@gmail.com, and I'll talk to you soon. Thanks.